You guys want to sell some stuff? Let's sell some stuff. Hey everybody, this is Spooky's Revenge. We're back with another episode of the 5-year, $500 Rags to Riches series. I gotta kind of hurry this up, so I'm gonna get my face out of the way. So here in my screen here, you can see that I'm updating our Rags to Riches team. So if you guys are in there, you guys can see that. I screenshotted the kind of the peak so far for the day. It's at a profit of $1,227.84 for the day. That is the NEO and the OCGN covered calls combined. So let me just move that out of the way. I kind of wanted to record this just in case it gets assigned on this recording, because that'd be pretty cool for demonstration. So I could show you guys kind of what it looks like. So basically, what's happening here is the price is kind of blasting right now. It's not really that far. It's only 6% for the day, but given the recent movement of this stock, that's a pretty substantial movement at a market open. So you can see here, this value is going to go up and down based on the contract value. The share price is just going up, and that's overpowering it. But as the contract prices fluctuate, that is influencing the overall value for the day. So you're going to see it go up to like 1,200, then down to like 600, then up to 1,500, then down to like 400. So if you're experiencing that, especially if you're on a larger account like this, don't let it get in your head because that's one of the most stressful things you can possibly endure when you first scale up into a larger budget. So that's why it's important to just start small, build your account up nice and slow. I'm used to this, so I can deal with it. But if you're a newer trader and you've got big numbers flying around, you're going to have to worry about staying attached to that money and keeping it grounded and realistic, as well as being okay seeing that kind of volatility in the numbers. And that's why we focus on percentages, because those don't really change that much. It's just the dollar amounts here you can see. Okay, so I've got 8,400 shares of NEO, and I sold 84 covered calls against that at a price of 55 cents per contract, which is $55 per contract. Those are currently worth 65, which means that the buyer of those contracts is up 10 cents or $10 per contract. So the strike price is still down here at 550. So we also have to incorporate that as well. So if we break it down, right? If somebody let's just assume one buyer bought all 84 contracts, so $10, well, $9 now, but we'll just assume it's $10. So if they're up $10 per contract, and they also have, 84, or they're looking to buy 8,400 shares, or just sell the contract, they're going to be able to buy those shares at $550, okay? Or $5.50 per share. So keeping in mind that the current market price is $5.78, that's a 28 cent per profit share. So if we do 28 cents times 8,400, they're looking at a profit, if they bought the shares immediately and then sold them at market value, that would be a $2,352 value, profit, I'm sorry, plus the value of the contracts that they paid, the difference there. So again, I'm just going to use 10 cents here, times 84 is $840, okay? Whoops, that's not what I wanted. Memory recall plus 840. Okay, so they're looking at a net profit of $3,192 if they were to just kind of assign the contracts right there and then sell the shares immediately at market value. Okay, and that would require an investment of let me just add that. All right, so that would require a 550 times 8,400, a $46,200 investment. Okay, so then if we take the 3,192, divide that by 46,200, multiply it by 100, they're looking at about a 7% profit right now if they were to assign the contract, sell the shares back to the market immediately, and then walk away. So in terms of, buying a call and acquiring the shares and all that good stuff, that's not really that significant of a profit. So the likelihood of me getting assigned is not quite that high. So if we just, if we look at the same metrics, right? Because once they assign the contracts, the premium just goes away. Like they're not selling the contracts, so they don't get that profit because they're using their right that they've paid for. So that is a deficit. So the share price that they're buying it in comparison to market has to exceed that. So if they buy 8,400 shares at 550 and they sell it at 605 to the market, which is 55 cents per share, so minus 5.5, that's a 55 cent per share profit, essentially. And, oops, sorry. I'm going to multiply that by 8,400 shares. That's $4,620 in profit just from the shares. And then we can subtract the $55 times 84 for the contracts that they've paid, and you can see that equates to 0. So that's why I don't believe I'll get assigned below 605, because it's not profitable for the person to sign the contract or exercise it and then sell the shares back to market. So even though they're getting the shares at $5.50 per share, if they assign it, they're losing the value that they've spent on those contracts. So they bought 84 contracts. They're going to want to make some money either on the contracts themselves by selling them to someone else, or in the share price by it exercising the contract and then selling the shares back to market at a profit. So below 605, that ain't going to happen. So one of the two things is going to happen. They'll either exercise the contract above 605, I'll sell the shares to them at that point, or they'll sell the contract off to someone else, or it'll expire worthless, in which case I make a profit either way. So I just kind of wanted to pop in and show that really quick, just to walk you guys through why specifically I chose 605, and that's just the strike price plus the premium on the contracts that I sold. So 550 plus 55 cents, 605. Anything below that is not profitable for the buyer of the contract if they want to exercise the contract and actually get the shares. Okay, so hopefully that makes sense. I don't want to make this a super long recording, but I wanted to show you guys kind of how the process works, and I'm kind of watching this one closely through the end of the day, through the end of the week. It's a lot of strength here. We actually just had a price downgrade. They cut the price target and the price is going up. We just kind of know how that works. So the market just doesn't do what it should all the time. Also, the analyst that that kind of gave that rating was a little bit sketchy. He's got like a 13% accuracy rating or something. So not too worried about the price cut, but it is still a headline and it's still volume, and that's why we're seeing some pushes the last 2 days. And the EV market over in China is just it's a hotbed right now. So we're just going to keep an eye on that. And then for OCGN, you can see the price is still just kind of going sideways, mild bearish. The contracts are losing value, which means I'm gaining profit. And the share price is down about 5.5%. So either way, I'm making profits here. Okay, so it's good stuff, and I'll keep an eye on this. If it gets assigned today, I'll update everybody on the next episode if you're not in the Discord, and if you're in the Discord, I'll share it throughout the day as I catch it. The beauty about this strategy is I don't have to watch it all day. I'll hear the notification go off when I get assigned, and then I'll come back here and I'll see what's up. All right, everyone have a good day. We got Jerome Powell speaking right now, so I'm going to jump off of here. And he testifies to Congress today and tomorrow. So if you guys are watching that, be careful. Expect a lot of volatility in the market, and we'll see what happens. Thank you, and goodbye.